Hello and good morning, my friends. Always good to see you here on the Impact Money Show. It's Friday, February 28th. We're broadcasting live from the heart of Washington, D.C., the swamp, where the air's got a mild bite this morning. Temps hit a balmy 68 yesterday here in the district, the warmest streak since November, but Storms Team 4 got showers on the radar for later today. Nothing too wild yet, but a gentle drizzle to cool the political heat simmering in these streets. And trust me, there's plenty of that. Sentiment here is at a cocktail of tension and anticipation. You've got the economic blackout crowd gearing up to skip Amazon and Walmart today. US 8 staffers still reeling from yesterday's 15-minute desk clearing purge, and everyone's watching the clock for Attorney General Pam Bondi's 8 a.m. Epstein files deadline. Less than 2 hours from now. It's a city on edge, and we're diving into what all that means for your money. Let's start with the weather here in D.C. because it's not just the forecast, it's market signal. Tonight, 7 planets: Mercury, Venus, Mars, Jupiter, Saturn, Uranus, and Neptune line up in a rare celestial show. The first in a while, and the next one will be 2040, which is a long way off. People are buzzing. X-posts are lit, with stargazers planning to catch Venus and Jupiter with the naked eye. Maybe Uranus with binoculars under clear skies in the Midwest and the West. Pretty crazy, huh? Sentiments, a mix of awe and wonder. Some call it a cosmic synchronization, a elliptic, they say, but the hype is real. People want their Instagram shot. Some skeptics shrug. The planets are always in alignment, they say. Could this spark a micro boom in telescope sales or dark sky tourism? Maybe a blip for celestial or travel stocks. But don't bet your 401k on it. It's more of a feel good than a GDP shifting. Still, in a jittery market, any distraction counts. I'll certainly have our telescope out with the kids this evening to check it out. I'll tell you that. Hopefully, sometimes we don't get the clear skies around here, but we will see. Speaking of jitters, DC's got a full plate. Yesterday's US 8 clear out. Hundreds of staffers hauling boxes after Trump's doggy axe fell. Hits home here. The Department of Government Efficiency, Musk, and Ramaswamy's brainchild, of course, Ramaswamy is now running for governor, is slashing $2 trillion from federal spending. And this is the first big scalp. Just the first. This is the first big scalps. It's the first. Okay. Post on X, tie it to a broader liquidity squeeze. I've talked about this. Your dollars might not stretch as far if bureaucrats stop spending. And then there's the economic blackout push in the grassroots groups like People's Union USA, led by meditation guru named John Schwartz, wanting you boycotting Amazon, Walmart, and Nestle today. Economists scoff. It won't crater the GDP, but X-Chatter got traction with his sequel eyed for March 28th. Consumer sentiment already wobbly with Trump March 4 tariffs on China, Canada, and Mexico looming. Retail stocks like WMT and Amazon might twitch if this sticks. Watch discretionary spending data next week. At this moment, Dow and NASDAQ futures are up. It does point to an up day for stocks. Tariffs are the real DC beast right now. Trump's fentanyl-linked levies. China in the crosshairs, with Canada and Mexico as collateral. Kick in Monday. And investors are gaming out Beijing's counterpunch. More stimulus, loser policies, Looser policies. Post on X bet on both, which could juice Asian markets but spike U.S. inflation. Already up 5 months running. The UK's dodging the bullet. Yesterday, White House meeting with Keir Starmer, Prime Minister Keir Starmer, saw Trump grin through trade talks, hinting at a great deal. Starmer handed over a letter from King Charles III inviting Trump for a second state visit, an unprecedented royal nod. X loves it. Royal fans and MAGAs cheer. The pomp. Brits split on whether it's charm or pandering. If it locks in tariff exemptions, pound sterling might tick up. Check the Great British Pound US dollar today. I'm sure we'll talk about it with great Matt Dixon shortly. Trump's near future visit could move luxury exports like Scotch whiskey. Keep an eye on Diageo. But the Epstein files, what a debacle yesterday. Oh my gosh. That's DC's ticking time bomb. Yesterday, phase 1 dropped from Bondi. Flight logs, a redacted contact list, handcuffs and evidence log. It was a big dud. Old news from Maxwell's trial. No new news. No, near zero, nothing. MAGA's mad. X calls it a nothing burger or deep state cover-up. Then late last night, Bondi fired off a letter to FBI. It wasn't really late last night, but yesterday. FBI Director Kash Patel. Thousands of pages are missing, she says, and she wants them unredacted by 8 a.m. today. 8 a.m. today. Plus a probe into why her orders got ignored. Sentiments raw. Rep. Anna Paulina Luna's fuming. X-post swing from Bondi's exposing the FBI to where is the client list? If 8 a.m. delivers financial dirt, Epstein's JP Morgan ties or Wall Street trails, bank stocks like JP Morgan could flinch. Tie it to doggy's cuts. Less cash floating. Trust cracking. Markets hate that combo. We'll keep you updated. The rollout of, I don't know, I guess Bondi was in charge of this. I don't really know. But what a mess. This rollout. They sent, they flew some influencers in from wherever, or the influencers flew in and they gave them all this thing. And then you got to feel bad for them. I know some of those people. And, they walk out of the White House and kind of get, from the looks of it, they got blindsided by reporters that were there for the UK Prime Minister. And then they're there smiling, holding the files. There's like 250 something girls that, are victims, and everybody's dancing. I mean, I think they were literally dancing. It was kind of hard to watch. I was glad that I wasn't there, because probably in the moment it was something else, but the optics were horrible. And what in the world is Pam Bondi doing? Just release the stuff. You're going to give it to certain people, and then everybody's got it. It's just the whole thing was weird. The whole thing was really weird. It stunk to high heck, to be honest. It really did. Now let's zoom out. Markets are bleeding. Bitcoin's down. It's at currently popping around here. Currently at about 80,500. It's more than a 20% plunge, or a 20% plunge from 100K, almost 100K last Friday, hitting 78,223 overnight. Ethereum and Dogecoin, I know Dogecoin are worse. Crypto shedding billions. Analysts call it a final pullback before new highs. Post-halving cycles love a correction, but I personally am a bit concerned. Doggy's $2 trillion cut could be drying up liquidity. If folks can't buy risk assets, then they may sell Bitcoin to pay their bills. $65,000 Bitcoin is not crazy. X sees and an analyst sees a dip buying chance, and that very well may be the case. There's no doubt about it. Absolutely. That's what the charts tell us. 86K is anything from, if that's true, anything from 78 to 86K is good. But tariff fears and 2.3 billion in liquidations sting. Trump's tax cuts might offset this. Now, this is the kind of the lining here, okay? Pulling this liquidity out, but then putting it back in. Cheap money fuels crypto. But timing is everything. Gold is off 0.8% this morning. Silver's down 1.39%. Dollar's up. The Japanese yen is down. Of course, the carry trade unwinding is always a fear. Tariff jitters and profit taking after gold's 29.54 peak are real. Most people tie this to a reset, not a rout. The yen's falling while the dollar climbs. Carry trade pausing, not unwinding. Japan's 0.25 rate versus the Fed's 5.25 to 5.5 keeps the yield gap juicy. 75% of August unwind is done, but traders are creeping back. The Bank of Japan is not hiking soon. That's the word on the street. Governor Ueda's watching 2% inflation, but 250% GDP debt says slow down. Jesper Cole at Monex bets 1.5% by late 2025. Of course, we're talking about the yen here. Inflation is outpacing us as a trigger, but no rush. Doggy squeeze might hit crypto harder than this trade. Japan's $6 trillion in foreign assets won't flip fast. Geopolitics is a powder keg. Putin's juggling moves. Yesterday, he hosted North Korea's Workers' Party in Moscow, gifting Kim a second Oris limo as Kim fired a missile. Seen by many as an anti-West flex. 10,000 plus North Korean troops in Kursk back it up. Putin's also pushing a U.S. thaw, telling his FSB to counter Western sabotage by chatting Trump's orbit. Trump trusts Putin on a Ukraine deal. Zelensky landed at Andrews Air Force Base last night, softening on a fair result. The Ukraine war is, of course, he signed the deal. The Ukraine war's third anniversary looms on Monday. Russia's 267 drone barrage overnight killed one in Kiev, and they're 4 miles from Donetsk lithium deposits. Is this a ceasefire or a stall? A U.S.-Russia deal could ease Russia's $300 billion in frozen assets. Commodities flows might shift if Putin's mineral pitch lands. On Palestine, Trump's February 4 Gaza Riviera plan, 2.1 million out to Egypt or Jordan, still haunts UN's Neve Pillay, called it ethnic cleansing. I've called it ethnic cleansing. I don't know what else you call it. Or genocide light, some say. With 62,000 dead since 2023. Yesterday, Israel bulldozed Jenin, 40,000 displaced there, mirroring Gaza's 1 million plus. Egypt and Jordan say no, but if it revives, oil could spike. Text Wild, 11 Labs AI bots spoke a secret language overnight. Yes, you heard that correct. 11 Labs AI bots spoke a secret language. They spoke their own language overnight, freaking many people out. Ethics flags are up. Tencent's new AI outpaces DeepSeek. OpenAI's GPT 4.5 dropped yesterday. Subscriptions bumps possible. In robotics, Figure's home bot voice commands. 39.5 billion valuation talks heats up. Meta's chasing Tesla's Optimus. Household robot stocks might simmer, but NVIDIA serves robotics dump tanked to 38%. Fundraising hot is hot. Mr. Beast is raising hundreds of millions at a $5 billion valuation. We're also raising, and that's going well, as a matter of fact. Crypto's raise got 63 million. Everyone loves the hustle. Doggy cuts could push private cash harder. We'll have to see. This is your opener. Markets, power plays, and cosmic curves. Stay tuned. I have with me here the great Matt Dixon with the Market Watch Report. Sir Matt, how are you?
Hey, good morning. Very good, thank you. Yep. So, been very interesting. Trump talking more about tariffs, piling more tariffs onto China.
He's pushing these tariffs, man, and the markets, they don't really like it.
Yeah, they're not going to like it. I mean, basically, if you push tariffs on, you've got to push prices up. Inflation's already a problem, so you're going to push prices up higher. But you're going to push growth down because everything's more expensive. It's going to put a dampener on economic growth. You know, maybe they know something we don't know, but it doesn't look as though it's, you know, it's very worrying. The markets obviously don't like it at all. I'll just share screen. We'll jump into Bitcoin, I think, straight away. You did mention about the pound. I think this is window dressing, to be honest. What's going on? I think is inconsequential, really, and I don't think that Trump will do anything special for the UK. I doubt. So yeah, it's not really affected the pound. I think the pound is in a long-term downtrend. I will probably actually. I was going to go into Bitcoin. I'll just visit the pound quickly. We'll come back to Bitcoin. That's on the weekly chart for Bitcoin, but I'll just jump into the pound. And I'll scroll out on the pound, look at a monthly here, and you can just see the trend. You know, I don't need to do much there. It's just been going down and down and down against the US dollar. So we get lower lows and lower highs. So here's a low in the pound, and obviously a lower high than previous, then a lower low than previous, then a lower high than previous, then a lower low than previous, a lower high than previous, and the saga goes on. So the pound is not looking good. The UK economy is not looking good. But in general, the worldwide economy is looking pretty sick. The US economy is also beginning to show some signs of slowing down now, but they have been the healthiest of the bunch until recently. But I think all this talk about tariffs is not really good. I mean, just look at what we're expecting today. We're expecting PCE today. So PCE inflation is still way above target, potentially even increasing. So it's a big worry. I mean, just look at Germany here, by the way, looking at their inflation rate. Previously 0.2%, they're expecting 0.4%. So a massive jump in inflation there. So German growth is really stalling, and yet they've got inflation going up. And that's really the same sort of thing that's just coming about with the US. And all these tariffs will just only increase prices everywhere. So inflation will get worse and worse. So things will become more and more unaffordable for the everyday worker, for the ordinary people. Inflation is going to get worse. So I'm not quite sure what's behind it. But looking at the United States, we've got personal spending out today. Now, it was 0.7%. The expectation is it's going to fall to 0.1%. That is actually the lowest it's been for a year. So spending is falling off a cliff. So people are beginning to hurt. They're beginning to see, cause for worry. So they're pulling back on spending. We're seeing all these job cuts in America now, and maybe they're warranted. I'm not saying necessarily it's altogether a bad idea. Maybe a lot of this money for international aid, I think, is misspent. And we know a lot of it has gone into the pockets of foreign dictators and so on. And that's not a good thing, of course. So, there's clearly, I think, something needs to be done there, but I'm not sure about the way it's being tackled, just cutting it right across the board. It just means there's less money available. Everybody's worried about what's going to happen, where they're going to get the next money from. And so they have to keep spending.
Yeah, I mean, I can tell you, here in the district, it's really no joke. I mean, people don't understand. They're kind of shrugging it off in the rest of the country, but they don't realize that there's a lot of people that have gotten pink slips, and the people that are still working know that they might get cut tomorrow or today. And of course, that has an effect on spending. I mean, just to think that that doesn't have an effect. I mean, you're just, it's just not even thinking correctly. And of course, a lot of that money, whether it was being used nefariously or not, was making its way into risk assets.
Yeah, and then you've got obviously those geopolitical issues being stoked. I don't know really what's going to come of it all. There's some crazy ideas flying around, and who knows how credible those are. But potentially, it is. I can't remember the phrase that you used, but when you said it, it was very apt. Basically, it's a boiling pot, and it's potentially going to boil over. So if that happens, geopolitical issues, then we have the problem of falling growth and rising inflation. And this is the problem with tariffs. They not only increase inflation, they decrease growth. So you're getting more and more into that stagflation scenario that we've mentioned for the past year. That's the big worry. And that's what is a real possibility. Obviously, if you have depression or you have deflation or whatever, you can hopefully do something about that by lowering interest rates, stimulating the economy, printing money, all the things they've done in the past to stimulate the economy. But if you have problems with inflation, you can't do all those things. So if you have rising inflation with falling growth, that's called stagflation, stagnant growth with inflation. And that is the big worry. And that is what tariffs seem to be pushing us towards. And that's why the markets are all jittery at the moment. But I don't think it's altogether necessarily altogether bad news at the moment. If I just jump into, we looked at the pound, which is declining. As I say, that's a bad story for the UK. But let me just head up to Bitcoin. As I said yesterday, I actually think this is a major buying opportunity. I'll just scroll out a little bit. So from the FTX crisis, back in, I think it was November 2022, wasn't it? The height of the FTX crisis, that actually signaled a low in the markets. So as we always say, when there's blood in the streets, that's the time to buy. Everybody was panicking. There was capitulation in the markets, people selling off. I think Solana was, what was Solana? Let's just have a look what Solana was then in November 22.
I think it went down to $11.
So
I'll never live it down. I tell the story often.
It's $7 or $8 at the time, $7 or $8. Even now, with all this turmoil, it's $133. So at the height of the FTX crisis, it was $7 or $8. So that's where things were, and that just shows that when everyone's worrying, when there's real panic. So don't forget that all this worry and panic over tariffs and everything is already factored into the market. People have already worried. They've already sold assets. So maybe it's time to start thinking about dollar cost averaging. And that's the story I've been telling now for the past few days. We can't tell where the actual bottom of this correction is, but I do believe it's a correction. So from this FTX low, we've had the wave one up. So an impulsive wave is made up of 5 waves to the upside in this case, because the trend is higher from the FTX low. So I've had wave 1 up, wave 2 down, 3 up, 4 down, and then we're working on a 5th wave higher. Now, it's conceivably possible that the 5th wave finished here, but I don't think so, because I gave a strong case. I won't go through it all again now, but I gave a strong case to support my view that this is just a correction to the downside, and it's not the beginning of another impulse. So this isn't the end of the impulsive move here. This is just part of the correction down. And I think we still have another push higher to go to new all-time highs for Bitcoin and for Solana and for quite a few others. So really good look about this particular wave count. The wave 2 and the wave 4 are very different, and that's the rule of alternation that we talk about so many times. Wave 2 and wave 4 are the corrective waves that go against the trend within a larger impulse, as I say, in this case, to the upside. So the wave 2 is very short and flat. The wave 4 is longer, drawn out and deeper, completely different waveforms, and everything you'd expect. And then this final push up, we've got a nice wave 1, 2, so the 5th wave itself, just to recap, is itself made up of 5 waves. So we have here, from this big 4 here, we've got a wave 1 up, 2 down, 3 up. I think we're working on wave 4, there or thereabouts, complete, and then pushing up in the final 5th wave to the upside to that new all-time high. So it looks really nice at the moment, and even the 3rd wave here looks itself to be made up of, well, actually, we'd have a third wave, here. Looks to be made up of 5 waves itself, probably 1, 2, 3, 4, 5. So it's looking really nice. So if we just open that out a little bit more, we're on daily at the moment, and we're going back right back to the FTX low. But if I look at the shorter term, go on to the 4 hour and just open this chart up a little bit so you can see the detail that I've got here in the final bit. So this is that wave 3, and I'm saying it's a correction down for wave 4. So this is perfectly allowable that the X wave just tips slightly above the top of wave 3. So we've got a W wave down, which is made up of 3 waves. We've got some kind of 3-wave move up, maybe from here, 3 waves up for X. And then we've got ABC down for Y. C wave is made up of 5 waves. So that's this final 5-wave move down here. That's what makes me think we are really in the end of this correction, towards the end of it. We can never tell precisely because corrections are the most varied type of wave there is. There's a lot of variations, different types of corrective waves, flat corrections, zigzag corrections, double zigzags, triple zigzags, triangles, all sorts of variables, and then all sorts of different types of flat corrections, expanded flat, regular flat, etc. So there's so many variables here, but what we can see is that this is apparently a correction, and I confirm that we have a triangle early stage here, telling us that this was indeed a correction to the downside. And so the final bit of the correction, as I say, is the final C wave, which is made up of 5 itself. So I'm going to go even shorter term just to focus on that last little bit of the move down and just open it up a little bit. So this is the final bit of the move down, which, as I say, is made up of 5 waves. So from the top of the B wave there, the final C wave should be made up of 5 waves. We have wave 1 down, 2 up, 3 down, 4 up, and then the final 5th wave down. So it may be that the 5th wave could even be what's called an ending diagonal. So the ending diagonal is the only one where you can potentially get overlap. It might not even be a diagonal, to be fair. We haven't even got evidence of that yet. It could just be an ordinary 5th wave. So the 5th wave, we can see the big move here is 5 waves. Then even within the 5th wave, we potentially have 5 waves to the downside. So we could have here wave 1 down, 2 up, 3 down, 4 up, and maybe even one final push down, possibly. But bear in mind, the market, and as I mentioned in my X, the market, Mr. or Mrs. Market, is always awkward, never gives its secrets away easily. And so whilst I'm confident we're in the final bit of this correction, the actual finer detail of it, I cannot be absolutely certain. It looks as though we may have one little more dip to go. Maybe we get that with PCE numbers. Maybe we get it over the weekend. I don't know, but maybe we have one little final dip. Not much, but a final little dip. So I wouldn't wait for it. I'd be dollar cost averaging, as I have been actually all around this area, dollar cost averaging, thinking we're probably somewhere near the end of the move down. And if it does dip lower again, that would be another opportunity to dollar cost average again. Because as I say, I'm confident. You need to do your own DD, make your own decisions, but I'm confident that we have higher to go, and that when we do reverse the upside, we're going to get some nice new all-time highs to come for Bitcoin. And we went into detail yesterday on Solana. It's actually recovered again really nicely today. The reason I think maybe ending diagonal for Bitcoin is because of what we have here with Solana. We're also looking for a final C wave to the downside, made up of 5 waves. We have 1, 2, 3, 4, working on a final 5th wave. This does not look like a completed final 5th wave. I think it's probably an ending diagonal. So an ending diagonal will be a 1, 2, 3, 4, and 5. Ending diagonal is one of those rare occasions where within a 5-wave move, and this is a 5th wave and made up of 5 waves, but it's one of those rare occasions where overlapping of the waves is allowed. So wave 4 here is allowed to overlap into territory of this wave 1. And that is a rare occasion. Only with ending diagonals and leading diagonals can that happen. And they normally occur within trend lines. And actually this looks as though it's pretty much within trend lines here. So let's just see, we could push just a little bit higher and then another push lower. I've got potential target here, maybe correct, maybe not. But as I say, I'd still be dollar cost averaging, even though I actually believe we're going to get another low to finish off this final fifth wave. And you can see I've got my wave 5 labeled already in advance, a little bit lower here. So a little bit lower before we potentially finish this whole correction, which is...
It is interesting because you actually called these levels over a month, two or 3 months ago.
Yeah, I was saying, I mean, obviously it's interesting when you see things like, you know, when Trump was elected, we saw the massive Trump pump, which actually caught me a little bit by surprise. I didn't expect it to be as strong as it was. And that was one of the rare occasions where I was a little bit caught out, not expecting such a powerful pump when Trump actually won the election. And I think that was all down to the surprise, because Trump was running behind until right up to very close to the election, when he actually won against some expectations, against a lot of expectations.
I was saying, I don't know, guys, if this is going to really happen. I mean, the cards were stacked against us for sure.
Yeah, so the fact that it was a surprise win was actually, I think, the reason for the power behind. You know, if something's expected, then it's already priced in and there isn't going to be a big reaction. But it was unexpected, really. It was only right towards the end that there became a real hope and expectation on from the Trump supporters that he would win. And obviously he did win. And we got this massive Trump pump in the markets. But then I did say well in advance that on Inauguration Day, the markets are going to turn, because all that euphoria will then start to run out, because he won't be able to deliver everything. And he certainly tried. He came out with all guns blazing, didn't he? But yeah. Clearly, there's been a lot of disappointment, a lot of concerns about the way he's doing it with the tariffs, etc. And so clearly on Inauguration Day, we were going to get a sell-off, and I signaled it in advance, and that's what's happened. And ever since that time, the market's been ebbing away. But I think now we're approaching a time of probably extreme negativity, perhaps even capitulation. So if we see another dip down, a lot of people will be saying, oh no, it's just going to continue down. When everyone gives up, throws their hand in, that is the time that the markets reverse.
I know my neighbor actually messaged me. This is the neighbor. I've talked about him for years. I talked him into buying Bitcoin at $600, and he paid off his house with it. And then he got back in, and he messaged me yesterday, the day before. Bruce, I'm really worried about this. I'm completely out. I sold everything and this and that. And I said, well, all right. Well, now we're probably going up, because that's really, you know, when everybody capitulates, like you just said, that's when the markets turn. Usually. Yeah,
definitely. I mean, the institutions who run all these funds and these trading platforms and exchanges, obviously they're in it to make money. And actually, most of their customers on all of these exchanges, Binance and OKX and all of the exchanges, Bybit and so on, they're retail traders out there trying to make some quick money. And you only need to look at, I mean, let's just jump into Trump coin as an example. This was one everybody jumped into. Well, I say everybody, an awful lot of people jumped into trying to make some quick money. And this is just absolutely typical of retail. They'll pile into something that they don't really understand. They don't understand the risk, but it's a gamble. And people love to gamble because they've heard some people, like you just said, who paid off their house. They got in at the right time with Bitcoin or whatever and paid off their house. And they hear some of these stories, but they forget that actually most people lose money. And the reason they lose money is the big institutions, the exchanges themselves are betting against you. They can see your hand. They know where your stop losses are. They know what your balance is. They know what your margin is. And they know where to move prices. And they know that everybody does capitulate when things start to go down fast and rapidly, and people's fear starts to take control. And fear and greed are the biggest enemies of traders. That basically, when things are going up, people get greedy and buy in more and buy in just at the wrong time. Same thing with fear. When people get really fearful, they sell just at the wrong time. And that's what the institutions and the exchanges actually thrive on, is people making fear and greed decisions. So here's Trump coin, went onto Binance, pumped. Binance sold off, I understand, allegedly, sold off a massive chunk of Trump coin. Began to drive the price down, and it's just continued down and down because it is one of those tokens that has no utility, no use case, no reason for existence apart from makes a few people a lot of money, but it loses a lot of people.
They should accept it at the properties. I can tell you, I just stayed at the Trump property and I was busy, so I didn't go up there and just ask them if they would take it. But there was certainly no signs around. I mean, if he really wanted to, make a utility for it, he could, put a little. We accept Trump coin here at the properties. The man's got a lot of properties. That could be a use case, but you and I have had currencies for a long time. Sometimes you don't like to. You need liquidity from outside sources. It doesn't appear that he's doing that.
Yeah, I mean, I'm just looking at the volume. It's still trading 15 million a day, which is actual peanuts compared with what it was. Here's the stats on it. Hasn't been running for a year. Obviously, it's only been running for a month, something like that. So down 58% in the last month anyway. But it's down a lot more than that in reality.
Yes. That's just from when they must have been when they added it.
Yeah. That's when it went on to Binance. Yeah. So actually from the peak, it's down from $77. It's $11 now. So it's down massively anyway. But anyway, overall, the market, I still think that people are potentially more fearful than they should be at this point in time. Clearly, long term, we've got some big issues and some big worries. But shorter term, I think we have completed the correction there or thereabouts. It may be already complete. In fact, what I did here was measure the movement from, we can see here, from the very top here on the left, where it was 108,000 down to the W wave, the bottom of this spike here. And I just transposed that to the top of the X wave I have labeled here. And we actually see that 1.618 is exactly where Bitcoin went to the penny pretty well. So that would be very satisfying for this final move down to finish here. And we're already beginning to see it move up. Now, if we see Bitcoin move higher, and if this moves up, and particularly if it finishes with a small green bit at the top of the candle there, then that will be an amazing bullish candlestick. So this one here, the one before it with a bit of a green in the middle, big spike above and below, is what's called a doji, spinning top. It shows undecided. We have to wait for the candle to finish before we can interpret what this one means. But I'm just saying, if Bitcoin pushes a bit higher, it could end up as a bullish hammer. And then we have undecided followed by bullish hammer, which would be a very bullish signal indeed, telling me that we're likely to push higher. And we do have some nice divergences as well to throw in there to tell us that things are looking potentially going to look positive reasonably soon. And as I said, with oil, potentially we're pushing a little bit lower, but maybe we get some geopolitical issue, maybe March, April time, that will send oil through to the much higher again. That would hit inflation. That would cause all sorts of problems. As I said yesterday, set the cat amongst the pigeons in terms of risk assets and what's going to happen there. But as we see, and if we see oil continue to drop here, that should be good for those risk assets. So as you said, the S&P is actually not looking too bad. We had, let's just go back to, I think that was weekly, was it, where I put those? No, was it 4 hour? I'm just looking where I put these divergences on. Okay, it was on the 4 hour. So let's just bring it up to date to where it is now. So we have, I think, slightly lower, fractionally lower on RSI. So actually there's no divergence there. So the divergence was eliminated. So I can remove that and I can remove that. Ah, dear. So we had bearish divergence, which signaled the top in the S&P 500, signaled the top beautifully, and we got the decline. I'm just looking now, this divergence has been eliminated. So basically, we don't have any particular signal right now as to what's going to happen with the S&P. So I'm now data dependent. So I don't have a technical indicator per se that's telling me, I mean, there will be some technical indicators, but the one I was currently using, which was a divergence, RSI divergence, is no longer relevant. The last one we had was telling us of this sell-off here. But we need to be data dependent now and wait and see what PCE comes out at. And and consumer spending. So let's hope they're positive. But as I say, we may just get one more push down. That's what Solana chart's telling me, that we probably get one more little push down, perhaps. But it's
then you go all in. No, I'm just kidding.
Well, if you've been DCAing all the way along, maybe you put your last DCA in there. There has to come some point somewhere where you stop. But we've been signaling DCA really pretty much in this final wave down here. So hopefully you're not exposed all this way up here, where we're actually telling people there's going to be some downside. But I actually was advocating DCA from around the 160 area, to be honest. So it's 160 is still $130 away from the high. So if you started DCAing around here and continued to DCA at various points on the way down, and I will continue to DCA, it's good to split your trades, maybe into half a dozen potential trades. So if you had $1,200, for example, split it into 6 lots of $200. So then your first $200 might go in around the 160 area, and you keep putting in $200 to eventually spend your $1,200. Once your $1,200 is spent, don't try and find more money. You made a choice, and at some point you'd have to decide where to put a stop loss on it. So your $1,200 needs to be $1,200. That you need to calculate what loss you're prepared to take on it. So this is all about your personal trading situation. I can't give you the rules because it all depends on your attitude toward risk, your appetite for risk, and you need to make those decisions yourself. But I'm just giving you some good guidances about how to split your trading capital. And obviously you also diversify between different assets and so on, but splitting your trading capital here into a few different pots to put in at different areas, that's called dollar cost averaging. So we did have some bullish divergence here, in fact. And in fact, we also have, so I was looking for divergences, we also have bullish divergence continuing. So we have here lower lows on price, and we can see that the RSI is going higher. So we can see here, RSI is continuing to push higher. So lower lows on price, higher on RSI. We can see that there's a divergence there, and it's actually a bullish divergence. So could even be that we get, as I say, another push down, but we've got a couple of signals there. As I say, I'm happy to DCA a little bit more of my pot into these assets at this stage. Dollar has appreciated just a little bit, hasn't it? And I think that was not always a good sign, and that's probably why we saw a bit of a sell-off. But I still think longer term, I think dollar's probably got further to go down. I don't think we've finished the decline for the time being. So we need to keep an eye on dollar, but dollar will be driven a lot by PCE as well, because a lot is driven by inflation expectations. Even dollar yen, I heard what you were mentioning about the yen going down. It's actually, as this chart goes down, the yen is actually appreciating, and that's actually the unwinding of the carry trade as the chart goes down. So at the moment, with the chart going up a little bit, that's probably good for risk assets. And you did say, I heard you say in your commentary that things were looking positive today for the S&P and for the Dow.
Yep.
And that is precisely what we're seeing. We're seeing positivity there. For some reason, my chart's not moving across. Oh, actually, we're already on it, yeah. So, yeah, we are on it now, yeah. It took some time to move over. So we're seeing a bit of positivity there on the S&P. And again, just looking about whether we have divergence. We don't really have any divergence in place. No particular divergences. So we need to look for other things. And when there's no divergence in place, you'll look at overall trends, see what the trend is, whether the trend is going to continue in that direction. And then you'll look for external drivers like the PCE news today. But at the moment, overall, we can see here, S&P 500 is still very much in an uptrend. So what I mentioned before, when we're looking at another asset, we're talking about lower lows and lower highs. Well, here we have higher highs and higher lows. So you can see here that this low is higher than this low, and this low is higher than this low. We can see that this high is higher than this high, and this high is higher than this one higher than this, and so on. So this is actually the definition of an uptrend. So it tells me that the S&P is still in an uptrend, and we haven't broken that uptrend until we break to a new low below the previous low. So that would be my risk reward barrier. If I'm going to go long here, my stop loss would need to be below here. If it does that, my definition of an uptrend has broken, and that changes my thinking completely. But for the time being, we had the sell signal up here, of course, telling us price was going to move down. But right now we're still in an uptrend, and as price is approaching this support, and we can draw a line of support, my chart for some reason is operating really slowly.
It's actually it's internet wide, or worldwide. My internet slowed down too.
Yeah, so it is working, but extremely slowly. Anyway, I don't need to draw a line particularly for you to see. I'll try to draw a line, see if it'll allow me. Something like that. Maybe that line will come in. But anyway, there is a line, a support line there. We're getting close to it. So it might be time to start thinking about if you fancy a long position. As I say, the trend is still higher for the time being. Then I will be interested in looking at long positions based on this support line. And we're above support right now. So that support line tells me where to place my stop loss, because my stop loss would be placed below support. If it breaks this previous low here, that would be a time potentially to cut the trade, take my loss. Except I made a mistake and went wrong. But for the time being, it might be interesting to look at long positions, DCA long positions, with a view to going to a new all-time high for the S&P 500. And as we so often say, the S&P is nicely correlated with Bitcoin, and a lot of the cryptos. In fact, obviously, a lot of cryptos follow Bitcoin. People were asking yesterday, what about a potential alt season coming, because I'm talking about new all-time highs coming for Bitcoin, and they're saying when Bitcoin, tops out and stuff. When will that be alt season? Well, alt season, if there is an alt season, I believe will be fully correlated with a rise in Bitcoin. Bitcoin has taken on such a tremendous interest now across the board with institutions, and so I know I've had a lot of disappointments about potential Bitcoin reserves, and that was again talked about by Trump in the run-up to the election, the inauguration, everything. And there's been a lot of disappointment there. It doesn't look as though Bitcoin is getting the successes and the authorizations and so on that were hoped for. And so that's another reason for Bitcoin falling back a little bit, that a lot of that euphoria is proving baseless, really. There's been no follow through. So, but I think now we're at a time where we're near support for a lot of different assets. And I think it's just dollar cost average all the way. That's the best strategy of all. The one I mentioned yesterday being one of the most positive, in fact, is one of the lowest fallers, Maker. It's still fallen 4.5% since yesterday, but that's actually one of the best in the market, believe it or not.
I know. Yeah, there's a lot of blood out there. A lot of blood out there.
A lot of blood. I mean, Ethereum has been a bad one. It was actually down 10% earlier this morning. It's still down 8% now.
It's interesting. I was reading Ethereum actually has the largest number of institutional shorts on it. They're all in on shorting Ethereum. I mean,
to be honest, I've fallen right. I've been saying this for ages. Fallen right out of love with Ethereum. Some old diehards say, "Oh, it's the I think they call it the oil that lubricates crypto because all the smart contracts used to be built on Ethereum. They're not now.
Used to be. Used to be, yes.
That is the operative word, used to be. Used to be. Nobody uses Ethereum to build now because it's too slow and it's too expensive. Still too expensive, despite the upgrades they've had. It's slow and it's expensive, and why would people use it? And they're not. And that's why Ethereum, I don't think, will ever reach its all-time highs ever again, despite having an Ethereum ETF. And it's had massive outflows, by the way. So I think it'll still rise with the market. It'll definitely run with the market. So if we see Bitcoin rising, Ethereum will rise. But whilst Bitcoin should rally clearly to new all-time highs, I personally don't think Ethereum will reach an all-time high again. The best it can do, in my view, is maybe possibly match its previous all-time high. But even that's in doubt, because I think Ethereum's had its day, and there's other tokens, And as you well know, one of my favorite tokens still is Solana, because there's an awful lot built on Solana. And even the meme coins, I know memes have not necessarily been a good thing for this market. They've actually sucked a lot of liquidity out of the market. People throwing money into memes and losing money. But even so, I think Solana still has a long way to go. And I think new all-time high, $295 was the previous all-time high for Solana. We're currently 133. So I think that we could potentially, and there's no guarantees here, but we could potentially, Solana could revisit and break that previous all-time high in short order, maybe within the next month, maybe the month of March, maybe April perhaps. We could push through that all-time high. That would be more than 100% gain from here. So this is why a bit of dollar cost averaging with money you can afford, money you're not going to need tomorrow, might be worth putting into some assets like Solana, for example, where there's potential for 100% upside. And if you don't want to lose all your money, obviously put a stop loss in at the right place where you only lose the amount you can afford to lose, but potentially you could make a nice little bit of spare money. So worth looking at. So anyway, that's it for today. I think we need to just be aware. Let's watch out what's going to happen with PCE today. That's going to be a big number and could hopefully potentially be the reason for a turnaround in the crypto markets and actually give a little bit of rocket fuel to the S&P, which is already looking positive for today. Dow, NASDAQ, and the rest of the stocks. Let's just see how it pans out today when we get that PCE news. And PCE, of course, is the Fed's third measure of inflation. So very, very important data due out later on today.
Amazing. Well, always a pleasure, my friend. I hope you enjoy your weekend.
And you too. Thank you. Just checking, by the way, it's 5:30 my time it's due out. The time right now is 4. So it's out in an hour and a half time, the PCE. So
right after the Epstein files, Pam Bondi's 8 a.m. Deadline.
Okay.
It's fun.
Look forward to that. Have a great weekend. I'll try and have a great weekend too, and look forward to catching up next week.
Cheers. Thanks, Matt.
Cheers.
The great Matt Dixon with the Market Watch Report. World-class analysis that we have here on the Impact Money Show every day, Monday through Friday. We are growing. I tell you what, I have some exciting news that I'm not going to share at the moment, but I'll share that it's exciting, and we are growing. So that's really a lot of fun. I'm going to play one of the interviews that we did with during the Global Family Office Investment Summit that we just had there in beautiful Sunny Isles in Miami. This is I don't want to mess up her name. Haley Yildiz. She kind of laughed at me when I said it, so maybe I was saying it kind of wrong. You can decide. She is anyway, she can tell you she's the founder and the CEO of Lumia Partners. This is our interview on location there in Miami at the Global Family Office Investment Summit at the Trump International Beach Resort.
Hey, welcome back, everybody. We're here with the Impact Money Show live on location at the Global Family Office Investment Summit. I have with me here Hala Yildiz. She is the founder and CEO of Lumia Partners. And I think you're local, right?
No, I'm not.
You're not? Okay.
No. I live in Luxembourg, moving to Dubai. Very not local.
Yeah, and Luxembourg is one of those places I've never been before.
It's the fund industry, right? That's how people make funds in Europe.
They make the funds out of Luxembourg. We have our fund out of Luxembourg. That's what they always say. Sounds so official. Yeah, very true. So tell me a little bit about Lumina Partners and what brought you here to the summit.
Sure. I mean, so I'm a part of the fund industry as expected. I lived around 8 years in Europe, in Luxembourg, and I was a part of the biggest LP in Europe. So it's the European Investment Fund. We were looking at VC and private equity funds to invest in the context of European policy priorities. So that's everything that is defense, climate, diversity, and things like that. So I came out of that environment from the buy side to the sell side. So now I'm working with emerging fund managers to help them raise their fund and help them present it to LPs in the best possible way, which is the most challenging job in the industry currently. Is fundraising for an emerging fund manager, which is the first and second time fund. And I'm also helping companies from from Series A to pre-IPO raise capital, also expand into new markets like Dubai, Abu Dhabi, and most recently Saudi Arabia. I have partnerships in the region. And so that's kind of a little bit what I do.
Well, it sounds so exciting. How long have you been doing this?
Yeah, it's good. So my Lumia Partners, my core business, is 1 year old. Okay. I've left my corporate job in the European Investment Fund 1 year ago. So I was there for a little bit over 5 years. Now, really happy to be independent, doing very interesting deals, looking at very interesting products like space tech, building rockets, some founders that are building middle mile logistics that are bigger than a helicopter, kind of like an airplane transporting like 1 ton of goods, looking at robo labs that are doing stem cell research. Very interesting projects I'm really excited about.
Well, yeah, that sounds so. It's the whole gamut. I mean, you're like sustainability and defense.
Well, keep them alive. Less defense, more sustainability.
Yeah, it is really interesting. So is this your first time at a Global Family Office event?
It's the second time. I went to the one in Dubai. Similar setup, different people. I think both ecosystems, they bring together global wealth. That's what the conference is about. And obviously I want to meet here global family offices. Family offices tend to be the best capital around. They're much more liquid than anybody else. They have more patience when it comes to investment cycles or commercialization cycles. So when I bring deep tech projects that are not going to go commercial for 8 years, that's family offices, not VCs, that I need to go to. And I think family offices are kind of becoming the foundation of deep tech investments. And I think they're very, very impactful, actually. So
that's really interesting. I mean, AI is something, there's not a day that goes by when I don't use AI, right? I feed every email through AI. I like even like short responses. I'm like, why not just do it?
I have like an AI, basically an AI employee at the moment. So who's doing a lot of my admin stuff for me.
Well, it's interesting. OpenAI now has the new deal. It's like $200, and it'll just send all your emails and everything. It's basically autonomously handle your stuff.
Yeah, there is there's going to be a consolidation now. OpenAI is getting into the agentic space. A lot of other agents are going to consolidate into bigger agents. So, a part of my fund, actually, I'm a part of a fund that is doing AI enterprise tech investments. Venture partner there, and we're really looking at those application layer solutions that actually have use case in the future, not today, because a founder needs to live in the future, not today, right? Now we look for those founders that live in the future that can kind of navigate that complexity and consolidation and stuff that's happening in the market, and actually build useful tools for enterprise businesses, because otherwise it's B2C and that's on the decline. Big guys can do that too. So
interesting. Well, now Dubai is one of my favorite places in the world. I've been there many times, so it sounds like that's going to be your base of operations.
Yeah, sure. I have business there now. There's a lot of opportunity. Unfortunately, a lot of Europeans are moving to the GCC because Europe is fragmented. It's going through some changes and challenges right now. And we're finding a lot of opportunity in GCC. Part of what I'm doing there is building the future along with people who are building the future in the GCC. So I'm working with the global family, like global priorities, the 2030, 2050 visions of the region. That is really sustainability, like electrified mobility, health tech, and food security solutions and stuff. And I think they're really, if anyone's going to find solutions to these things and build a futuristic kind of environment, it's going to be really that region where capital meets, priorities. So
where capital meets priorities, and they have the ability to really just get things done. I mean, it's one of the things. They're like, okay, we're going to make this new law, and like literally 3 weeks later,
forget about democracy.
It's law.
Sure,
that's
exactly.
it.
I think a lot of the democracy things are overrated currently when you want to make good decisions. But the problem is when you make bad decisions, right? So you need like those people who are far-sighted, those leaders who have that vision, and I believe GCC has that vision to actually execute on important things that matter for humanity.
Yeah, it's a very interesting point because we have recently elected Donald Trump over here, and I mean, by a lot of people's explanation, he's a dictator, he's a this and that and the other. But there is kind of this whole strong man or strong personality way that seems to work in today's environment, pushing things forward. So.
I do agree, and I mean, Donald Trump 8 years ago, I wouldn't have voted for him, but I think currently he was one of the best options that came out of the context that we're in. But I do agree. I think he does get things done, and I think he has a more leaner way of getting things done. I'm really interested to see what happens in the next 4 years in the U.S.
Yeah.
Maybe I consider moving to Miami instead. I don't know.
Oh wow, it's funny that you say that because it's actually something my friends that are in Dubai now that we've been doing business there for the last decade or so, and they're living there, and they're like, Bruce, it's all about the U.S. now. I want to get back into the U.S. Because of course you have less regulation, you have people aren't scared to do things, and you have a strong person behind it. So it's really interesting line of business that you have. How did you get into doing this?
Well, like I said, I fell into the VC world through Europe's biggest institutional LP.
Okay.
And so the asset class there, I mean, I realized way later that the asset class that everybody's investing in is actually the startups.
Yeah.
And that's what got me interested. I always come from a development finance background, so I did a lot of development work also in the finance. So everything meets development means finance is really European Investment Fund. And there, so I met this interesting setup where LPs invest in GPs and GPs invest in startups, and that's how like the entire innovation economy blossoms, right? So, and Europe, thanks to the EIF, actually, a lot of innovation happened. So I really liked being in the forefront of that because there we saw things that were coming that people in the bottom of the value chain saw years later, but the policy was being made basically up there. So it was very interesting to see that policy being made and those priorities being made and those investments being planned years in advance. And you see the fruits of that 2-3 years later, actually, in the ecosystem.
Pretty amazing. So tell me maybe some closing thoughts. How do people get a hold of you? And where do you go from here?
Well, I'm in LinkedIn. I haven't even had website presence yet. I don't have a website yet. My business is quite recent. It's 1 year old, and I have lots of business, so it's going well. If you want to reach me, I'm in LinkedIn. I think it's the best way to reach me. If you want any advice on expanding to the Middle East, I'm very happy to help. If you want advice on capital raising, anything that has to do with fundraising or also raising a fund and the VC ecosystem as a whole, very happy to talk. And yeah.
Amazing. Well, thanks so much for coming on.
Yeah, thanks for having me. It was fun.
See you soon.
We're in Miami, on our way to the Trump International for the Global Family Office Investment Summit. Guys, stay tuned. This is our Lambo for the shoot we're going to do. So that'll be fun.
Submit for formalize these kind of transactions. I met with French Hills like each other. Well, gentlemen, it's been an absolute pleasure. You can find each of these guys and talk to them and tell you their wealth of information.
All right, we're in front of the Lambo. Hold that. Hit stop for a second.
Bruce, what's up, man? I knew I'd see you here at the Global Family Investor Summit.
Yeah, man, this is the place to be at the Trump International Resort. I mean, it doesn't get any better than this. So I hear you're raising some big money.
All right, yeah. So we just launched our new energy fund. So we're here to raise $100 million.
$100 million. Well, this is the place to do it. Global Family Office Investment Summit. All the big money is here.
That's right. That's why we're here.
But George, I want to introduce you to Crypto Gal. She knows all the inside cuts on the family office events.
All right. Hi, nice to meet you.
Nice meeting you. So what brings you to the summit?
We just launched our energy fund and we're here raising capital for our newest venture.
Awesome. I have the perfect strategy to help you raise money while we're here at the summit. I'm super excited. We should talk. What's up, Randy? I haven't seen you in forever.
I know, it's been since back in Jersey. Tell me what's new.
Well, I have some new clients. I actually wanted to talk to you about getting them on Global Boost because I know you have a huge reach when it comes to crypto and TV.
Yeah, fantastic. Let me introduce you to the guys right away. They're right over there.
Hey, Vin.
Hi. Do you know that our public sale is 40% achieved over the last 7 days?
That's amazing. You know, with what you're doing with ESG and the Mindwave DAO, I think this family office event is the perfect place for us.
Bruce, we need the strategy now.
I have the perfect person for us, Crypto Gal. Meet Crypto Gal.
I love Bitcoin yield generation. Neela would be a perfect fit. Since Neela is ESG compliant and yield generates Bitcoin, it's a perfect fit.
Bruce, these deals are really coming together.
Anthony Ritosa pulled out all the stops on this one. There's so much money in the room, and the quality of everything is so high.
Vin hit it, George hit it, and we are hitting our goals. That's why I love it here.
It's going to be fun, guys. If you have not made the time to come in and see us, well, that's all right. We'll tune you in. We'll keep you posted, so to speak, because keep in mind, Global Boost Media is a place that's going to broadcast and showcase so many neat investing products, people, and opportunities that you can learn about and be a part of. Maybe you're a family office. Maybe you're just some CEO and you say, hey, I have an idea. I'm a founder and I want some coverage. I want to be seen. I want to tell my story and get people out there. Hit up Global Boost Media and maybe we'll give you a chance to tell your story.